Alright, what's up guys? It's Jeffrey, and today's video we are going to be talking about how to grow a $100 account with low risk. And this is part 2 of the series Understanding the Forex Markets. So I'm thinking this is going to be a 4-part series, so there will be 2 more videos after this one, and that will wrap up the series. Okay, so with a small account, things you're going to want to avoid is going into the market and trying to make huge gains. So whether that be like, you're going in the market trying to make a $500 day with a $50 account, or you have a $100 account and you're trying to catch 200 pips a week, like just set realistic expectations for your trades, and especially your account size. You don't want to over leverage a $100 account and then blow it and then deposit another $100 and then continuously keep blowing accounts. So how you avoid that is, use proper risk management and set a realistic, daily objective or weekly objective for the amount of pips that you want to bank for the day or the week. So step number 2, don't over leverage your account. This is one of the most common mistakes for any new trader, or even somebody who's been trading for like a year. I struggled with this for probably a year and a half until I stopped really over leveraging my account. And it's something a lot of people don't go too in depth whenever they're teaching it, because as a trader, each person's situation is different. So one person may have a $1,000 account, one person may have a $100 account, one person may have a $10,000 account. And the situation that each of them are in are different, so they're going to risk more, some may risk less, and ultimately, if you have a small account, you're trying to make a lot of money and you're over leveraging, let's be honest. So what ends up happening 9 out of 10 times is you're going to end up blowing your account. So don't over leverage. It's really stupid, and it's just such a common mistake, to make as a beginning trader. So don't do that. And also, so a lot of people that start off with, say, a $100 account or a $1,000 account don't feel like they can grow that to an exponential amount, like say $100 to 10,000. It's definitely possible, but everybody's trying to do that in 2 weeks, and that's not possible. Don't assume that you can't grow a $100 account to an exponential, size. You just have to be patient and use proper risk management. Don't over leverage every single trade that you take. Don't try to make your normal 2-week paycheck in one single day of trading. Just don't be unrealistic. Like, trading is not the answer to, all your prayers, and it's not going to come with, like, you can't just be successful in trading with lack of effort. So you have to be working, you have to be studying, you have to be developing some sort of a plan. Like, you have to set actionable goals every day as a trader in order to succeed in this industry, because it's so easy to just bank everything on one trade and then just think that that's the answer for you. So the last thing is trading without a plan. I think having a plan for how you're going to enter a trade is probably the most important thing. Like, whether that's a plan that's written out, or whether that's just kind of a plan that you have in your head, or like a checklist, or a video, or whatever it is, you need some sort of plan whenever you're going into the market, because everybody's going to interpret the market differently. So your plan, you're going to be waiting for specific things to happen, and over time, as you're seeing those specific things happen over and over again, you're going to be a lot more confident in taking that specific, trade setup, or whatever that's your own special setup. And then, as time goes on, you can put more risk behind that, because you have more trust in that setup. So just that's something to keep in mind. Like, you want to have a plan. Don't just, trade every single day because you feel like you need to be trading, and also just because you need to make money or change your family's life or whatever it is. Like, just don't be unrealistic with, this. Like, it takes time, and you have to be putting in the work every day in order to succeed at this. All right, so setting goals. Set a realistic, like, this is basically everything that I just, went over, but it's just in a step format. So set a realistic number of pips you want to catch per day and per week. Like I said, this is absolutely key. You don't want to just be setting unrealistic expectations of, pips per day or per week. Set a 20 pip goal per day, set a 50 pip goal per week, and call it that. That's it. Just once you make that number, then stop trading for the week, and then look to do the same thing next week and the following week after, and then eventually that will be something that's profitable for you. So understand, when you enter a trade, the trade doesn't have to go in your favor. A lot of people will, get in the trade and then immediately think, okay, it has to go my way. And the whole purpose of using a higher time frame analysis and doing your study in the charts and actually understanding what you're looking at is to avoid this very thing. But ultimately, we don't control the markets, so it can go, the other direction that you're intending it to go. And you just have to have a trading plan, like we talked about, but you have to have a specific plan for when you're looking to get out of the trade. If it starts going against you 10 pips, do you exit? Do you wait for a swing high to be broken? If you're selling short, like, what is it that you're looking for specifically to know that you're wrong? So it's just important to have a plan for when you're wrong as well as when you're right. So one of the best ways to be profitable in trading, especially with a smaller account, is enter trade setups that you can realistically see have a minimum of 1 to 2 risk to reward. So any trade that you enter, if you're looking to enter something and you're risking 1 and you're looking to make 2, then even if you're wrong, you'll still be profitable. So because you're making, if you're wrong, then you lose in 1. But say you're right, you're making 2. So you've made back what you lost and what you risked. So it's always good to set, personally, I set a 3 to 1. So I'm looking to make 3 for every dollar that I risk, basically. So that's just my personal plan, but 1 to 2 is a really good starting point, or even 1 to 1. So, again, be realistic with it. If you're just starting out, say, I'm looking to make 1 to 1 on every trade that I take. Okay, so the last step is look for setups that indicate you can have a tight but realistic stop loss. Okay. Everybody that's just getting into trading will get in the market and then they'll set, a 3 or 5 pip stop loss. And most of the pairs, especially majors, have already a 3 pip spread. So you can't just set a 3 to 5 pip stop loss as soon as you enter the trade to barely risk anything and then set a take profit of 100 pips. It's again, not realistic. So make sure that whenever you're getting in a trade, me personally, I like to have a minimum of 20 pip stop loss. I think a 20 to 30 pip stop loss is a good, amount to risk for either a short-term trade or even a day trade. And as you get more dialed in and focused in the markets, you can have 10 to 15 pip stop losses, but as you're starting out, you need to be focusing on 20 to 30 pip stop losses with 20 to 30 pip targets. That would be that 1 to 1 risk to reward ratio. Okay, so things you're going to want to focus on. If you're just starting out, I think you should only be focused on at least 20 pips a week. So if you hit 20 pips, then you should stop trading for the week. And basically what that'll do is teach you how to be patient. Because as time goes on, as your account grows, 20 pips will be more than enough, you know, to replace your 2-week paycheck or whatever you're looking to do. 20 pips is 80 pips a month. So 80 pips a month on, one standard lot is $800. So that, may not seem like much, but to some people it is. 10 standard lots on 80 pips is $8,000. So you just have to think about that. Like, as your account grows, your trade profits will increase, and you're not going to need to make 100 pips over, a week or even a day. Like, you can look to make 20 pips a week, and then you could be good, and then get out the market. So you can basically go in the market on Monday, make 20 pips, and then get out, and then be done for the rest of the week. So just, again, be realistic. Don't try to say, I'm going to trade every single session, and I'm going to catch 20 pips every session. As you get more experience, yeah, you can do that, but starting out 20 pips a week, definitely a good objective to set for yourself. All right, so the next thing is always trade in the direction of the daily bias. So if you think the market is going to go higher on a daily time frame, then you're not going to look to sell it on an intraday time frame. So you're always going to want to be trading in the same direction as the higher time frame. So if you drop down into, say, an hourly chart and you're trading Euro USD and you expect it to be bullish for the day, you drop down to an hourly chart, don't even look for any sells. You're only looking for buys. So look for anything to support a buy. You're going to look for it to trade into a support level, look for it to break market structure, retest an old level of resistance that should be support. Whatever it is that's in your trading plan, that's what you're going to use. Don't focus on any sells at all if the daily bias is bullish. So that'll basically eliminate 50% of the problem, of wondering, oh, should I be buying or should I be selling? Whatever way you think that the daily candle is going to go, that's the way that you want to be focusing on trading on an intraday time frame. So only execute the trade if market structure has been broken on an hourly time frame minimum. So all that means is, I'll actually show you an example real quick. Okay. So if we take a look at this chart, all right, if we take a look at this chart here, we can see right here, whoa. All right, right here was a level of support, right? It broke through this, acted as support, traded higher, came back, acted as support, traded higher, came back down. Once it broke below this, then it should act as resistance, right? Comes back up, comes a little bit above it, but ultimately trades lower, comes back, retests it again, so another potential entry, sells off, comes back, retests it yesterday, and then trades off, sells again. So what does that mean? Well, if we're looking on it, this is an hourly time frame again, so we can see market structure here was bullish. We had a low, then we made a high, higher low, higher high, higher low, higher low, higher high, higher low, higher high. Once we broke back below this, then it indicates, okay, the market's bearish, right? We've had a market structure break. Now we have a low, a high, lower low, lower high. Now what do we expect? Another push lower to make a lower low, right? Because we're in a bearish market structure now. So next level we'd be looking for is below here, below here, below here, and basically each swing low going down. But that's just an example of waiting for a break in market structure, because once we had the break, we had a potential sell here, came back, another potential sell, came down, another potential sell. So it acted as resistance basically 3 times that we could have gotten in a potential sell. If you're looking to take any short-term or intraday trades, making sure that you have a break in market structure on the H1 hourly time frame minimum that's at least part of my trading plan. So whether or not you incorporate that into your trading plan, I think it's a good thing to at least go test in your charts and see how it's worked and if that's something that you want to incorporate or not. But that's it for today's video, guys. Make sure to like and also subscribe. Basically, if you like this video, that helps it push to other traders out there who, they may be beginning, or, for someone experienced, this isn't maybe the best video to watch, but for a beginning trader, I believe this can help them out. And also subscribe. I post daily Forex videos. So some are educational, some are basically my weekly analysis or even my daily analysis. And down below in the description, you'll find 2 links. The first 2 links, one of them is for my Facebook group and the other one is for my Telegram channel. Both of them are free, and basically it's just a community that I'm building, like, of traders, for us to all share our analysis, what we see going on in the charts, and anything that we've learned or little tips and tricks that we use in our trading plans. So make sure to hit those links if that's something you're interested in, and I will see you guys tomorrow.